All right. Let's kick off this wonderful WEC conversation on this beautiful sunny day in Brussels. Um, I welcome everyone who has already arrived into this room, and we are waiting for people to gather. And while they do, I would like to present myself first. My name is Victoria Proskorowska. I'm working at the World Employment Confederation head office, responsible for labor market intelligence. And we organized this webinar today to launch the freshly published report, the Industry Impact Report, which looks at the role of private employment agencies in the economy and in the society. And to join me in the conversation, I have a panel of speakers that I'm going to mention just now in a moment. Before we move forward, I just want to have a quick housekeeping announcement. So this webinar is being recorded, and the recording will be sent to all the registered participants. So I hope everyone is fine with that. And the other mention I would like to say is that if you have questions in the meantime, while we are discussing all these very interesting topics today, please drop them in the Q&A, and the most interesting questions will be addressed at the end at the Q&A session. And with this, I suggest we dive right in. So as I said, the report that we published last week is out, and it's packed with very interesting information. Basically, the key messages that are coming out from this report is that labor markets are really going through an accelerated transition, and markets are transforming, but faster and more unevenly than before. We see a cooling of the labor market in many mature economies, while part of the APAC and Latin America continue to show stronger momentum. And the divergence is driven by structural forces, really, by demographic aging, by rapid digitalization in all spheres of work, and by persistent skills shortages that we have been observing for a while. All of this is reshaping how workers and employers connect and how talent moves across sectors and regions. The first takeaway is that despite all these pressures, private employment agencies around the world continue to provide stability. And in 2024, 61 million people have been placed in jobs. And that's worldwide, despite the fact that the revenues of the private employment agencies have been softening. And this demonstrates a critical point that our sector acts as an engine that keeps people attached to work or connected to work when it matters most. In a time of uncertainty, the flexible workforce solutions industry remained a source of resilience for workers and businesses. The second takeaway from this report is that there is a continuing disconnect between the changing demand for skills on the one hand and the adaptation of education and training on the other. And this deepens the need for labor market intermediation, which is focusing on reskilling, redeployment, and managing career transitions. And that's why this intermediation is becoming a strategic lever for mobility, productivity, and inclusion. And the third point I would like to draw is that global workforce dynamics are fragmenting around the world, and placement growth is increasingly concentrated in APAC region and several emerging markets, while Europe and North America show signs of contraction, and the pattern is structural rather than cyclical. And this means that workforce strategies can no longer be one size fits all. Regions face different pressures and different opportunities. So to discuss all that, I have invited, as I promised to announce to you, a wonderful group of people. I don't want to call them a panel because today we are discussing in a format of a conversation. And I've got here Marco Tucci from Lightcast, the partner of WEC, Martin Meier, the vice president of the Adecco Group for Strategy and Insights, and Robin Maillard, researcher at Conference Board. I will present you in more detail shortly, but maybe I can invite already Robin to give us a more let's say, sort of high-level overview and present your insights into um, how you see the situation in the labor markets right now and the drivers and your analysis at the conference board. Please go ahead.
Sure. Yeah. So um, I'm Robin Maillard, so I'm a researcher at the Conference Board. The Conference Board is a global think tank working mostly with multinationals in order to navigate the complex economy and also the labor market. So the discussion we will have today. Can you show the slide, please? Yeah. So my expertise is on human capital related aspects. And what I'm going to present today is our work on the Where to Hire index, which is a new index we developed at the Conference Board. So the main message of this index is that hiring competitiveness of different markets, of different countries, is multidimensional. And that's what we try to capture with this index. So we try to capture four main dimensions, so workplace culture, institutional society, labor market dynamics, workforce cost and competitiveness, and talent and skills. Can you move to the next slides, please? Yeah. Yeah, thank you. So here you can see we started with Europe, but we will extend that index to the world in the coming month. One of the main key insights is that high wage countries can still be the most attractive places to hire because they have skills availability, they are productive and stable, and this offset cost pressures you can have in these countries. So if you see on the map on the right, you see that the most attractive countries or the most competitive countries in terms of labor market nowadays are Denmark, Switzerland, and Ireland for the top three. We also identified other unusual suspects, if I may say, such as Czechia or the Baltic countries, which are also coming are on the rise in terms of competitiveness. Other macro signals we noticed is that the labor market is tight. It's not a news. It has been tight for the last years, but it will remain tight in the coming years. Not in terms of not having people to hire, but more in terms of having the talent and skills available. That's where it will stay tight because there is. We believe that there is a persistent skill mismatch based on analysis, which is due to several factors, but mostly due to demographic aging, a very high-paced digitalization, making skills needed changing very fastly, and sectoral transitions that are reshaping where the talent is available and where hiring will remain difficult in the next years. So the implications for labor market intermediaries, for agencies, is that cross-country comparison of talent and skills ecosystems it's more and more relevant, and it's more relevant than a benchmark. The idea is, what I mean about that is that it's important to have a real view on all the different dimensions, all the settings that are relevant to one company or one situation, and make sure that you are able to pick the right destination based on the needs. And that's what's important with that index, is that index would allow all members at the conference board to really say, I'm really interested about that aspect, and I want to target then that country because according to our analysis, it's better to go there. So agencies and employers that understand where skills, productivity, institutional favorable conditions align will be the best positioned to navigate current fragmentation of labor markets, according to us.
Thank you very much, Robin. I already have questions for you, but I would suggest first that Marco steps in to talk to us a little bit about the role of AI in this changing labor market structure, and give us some insights that Lightcast has thanks to the online job search that you have, the infrastructure to analyze on a daily basis. Please go ahead, Marco.
Thank you, Victoria. Thank you for the invitation, and thank you for the presentation. My starting point is that I would like to talk about is about the AI adoption that now has moved from considering AI skill as a technical skill, but it has become a core bunch of skills across all the job occupation in the labor market. So the shift in the market is not that the issue is no longer hiring AI engineers, but we are speaking about AI augmentation of all the job roles of all the occupation, from the HR to HR sector in different economical sector, from finance to manufacturing. But what I have in mind is that AI now is everywhere, of course, but the conversation for now is mostly hype. Headlines say AI is coming for our jobs, but our data shows that the situation is quite different. So our data shows that, of course, there is a sharp increase in demand for AI globally. Of course, this is for sure. But for now, there is a limited evidence of AI taking over jobs, at least for now. So what the online job data are providing us. Online data provides real-time map on how AI is being embedded in our economy. And I have three main considerations on this. First of all, the AI job does not mean technical job. Okay, over up to 51% of online job posting that are mentioning at least one AI skill are related to non-ICT occupation. Okay, and this is really important because the AI skill are spreading around all the job role, the job occupation. In the same data are showing us that when the job posting is mentioning at least one skill, it means that there is a salary premium, more or less about 28%. As a salary premium. Of course, we are speaking at the global level, so we have to dig into more details about the geography, the economical sector, but this is an important signal. The other thing that we can observe in our data is that the career area at this moment are at different stage of adoption. And so it means that the labor market is evolving on these things. We are seeing also, of course, that there are two main clusters of skills in the online job vacancies. We are speaking, of course, about the AI skill clusters. And of course, we can also have a good understanding of the green skills cluster. But now we are speaking about, today we are speaking about AI. Lastly, I would like to connect to your second slide, Victoria. So we are observing that a skill match is widening. Yes, also as we are observing this phenomena. In my opinion, there are two important implications. One is for the companies that they are moving they are changing the approach. So for hiring new people, they are changing their degree first approach into a skill-based hiring. So they are not looking for a job title or a specific occupation. They are more looking for people that have a well-defined skill set. And so they are looking for the people that have those skill set. And one consideration for this is that how can we support this shift? I think really that this is for mainly for the policymaker, but we should support more the micro-credential models, the certification, because in this way the companies can define short training for the employees in order to be able to upskill, reskill the employees. And so this is really important. The last thing that in my opinion, is more related to the intermediators, to the intermediation world, is that the intermediators should work more as advisor. So they should be able to act as a translator between shifting data and human potential. What I'm trying to explain is that you can use the real-time data in order to understand what occupation shift based on skill similarity you can do. So having in mind a specific occupation, a specific skill set for this occupation, you can analyze what are the adjacent, similar occupation with, of course, a different skill set. The skill set could change one specific skill, two specific skill, but of course we can prepare and use people to be trained. And last things, it's last but not least, really, I really believe that is really important. I would give more priority on training in durable skill, the soft skill, because they are really the AI-proof skill, because the skill, the hard skill, the AI skill are changing so quickly that you must have a positive human attitude in order to be able to manage those changes and those challenges. So it's really important for my expertise. Thank you.
Wow, fascinating, Marco. Of course, I also have a lot of questions to you, but you have outlined some really very interesting recommendations and suggestions that I think would be very interesting to discuss now in the discussion. But first, I'd like to give the floor to Martin Meier to give us all the view from the Adecco Group perspective on everything that is happening, and maybe giving us some hints about where is growth going to happen in the world this year. Are we looking at industries? Are we looking at geographies? Are we looking at some other kind of way of slicing the cake? Let's put it this way. And what is your experience and your view on all of this? Thank you so much.
Thank you, Victoria. And first of all, thank you so much as well for the invitation. Thank you for having me. People can see the introduction here, but I want to add that I'm calling in from the headquarters of the Adecco Group here in Zurich. I'm almost 20 years in the organization, have worked in many parts of the company, and I'm very happy to join this panel today. So you asked me in preparation for that session today, Victoria, around some insights, which markets develop best and why. So I want to hone into that first a little bit, and then probably enter additional topics. So let's focus first on the momentum of the labor market, right? And looking at it globally, I think we can summarize it in a situation where we are in like a high employment rather low growth world, right? And the OECD, employment rate, if I can reference that, reached record level in 2025, right? The employment rate is over 70%. So a lot of people are employed, and the unemployment rate, like globally, is rather low. But strong employment does not necessarily always mean strong momentum in the labor market, right? And I think from a global perspective, I try to cluster some of the geographies in the following way, right? On the one hand, we have high growth markets like in APAC, where we see strong growth, for our organization, even also in India, where we see like strong GDP combined with like digitalization. There is huge tech demand, and this is driving job creation, right? Then we have markets like Japan, for instance, which are structurally tight markets, right? Where we have like an aging population, and this creates, persistent labor shortages, right? And this also boosting demand for our services. And I mean our services, I mean the likes of companies in the HR service industry, demand for staffing, demand for reskilling, demand for talent mobility, demand for redeployment, and another cluster of countries. And then we have regions like Europe. If you look at it overall, right, also not the highest growth by historic comparison, but also there we have selective outperformance, right, from an overall market point of view. Looking at Iberia, like Spain, showing some good growth. So bottom line, and summarizing, labor market success factors, if you like, right? So markets perform when the growth, labor scarcity, specific sector demand, and also the regulation for flexible workforce align overall. So overall, maybe a mixed bag, right? But what I always do, and we also do within our organization, we not always look at the overall headlines. We really need to de-average the data, really go beyond the headlines and look at each of the markets, each of the segment in a very specific way. And second point I want to overall mention, right? What does this all mean? The labor market dynamics, the labor market momentum for our industry, right? And what we see is that in most markets, clients are hiring, right? But cautiously, and they prioritize flexibility over fixed cost, talent solutions over like standalone spot solutions, especially when we collaborate with large organization. And what they are focusing on, and also in client conversation, right? They shift from a mindset of like, we need to fill a job, towards we need to solve like a wider workforce problem, which then requires us as a service provider to think about combining solutions, right? Integrating specific services around staffing, RPO, MSP, bundled with skilling, where there are big opportunities. And I want to pick up a point from before, where like you said, clients look for advisors, right, and data. So I really can confirm that that clients want to have, on the one hand, access, like fast access to talent, and at the same time, like better data, increasingly support around skills development, what skills are needed in the future. So building advisory capabilities, providing insights, right? I couldn't agree more what you said before, to basically advise them, especially in light of the AI and transformation. So being already towards the end of Q1 in 2026, the implication is pretty clear and good, right? That agency work, our work, and the workforce solutions remain absolutely critical, right? To help companies, to help our clients remain flexibility, agility, and I'm in general positive, but also in light of all those dimensions are happening, positive for our industry. And continuing the conversation and following up what Robin said as well before. Maybe a question to you first, if I may, Robin.
Yeah.
Right. You had some really good points in there. So what I wrote down, right, in the current economic environment, right? So maybe you can double down a little bit on from your point of view, right? Also the resilience of the work of agencies, right? Of what we do, and maybe you can talk about some data or signals on where you see some misalignment from what employers demand and what talent is available. So maybe we can share a few thoughts around that.
Yes, sure. So as I started to mention, the labor market is tight and will remain to be tight. That's the first big thing and context to bear in mind. Even if the economy slows, the demographic aging and other things such as the supply of talented workers, skilled workers in some areas, which is not expanding, this limits how the employment can grow in the next years. And this is a good news for agencies and for employment agencies because the main constraint for employers is to find the right workers, the one with the right skills. Because many of our members, so multinationals, they mentioned that they can grow, but only if they can access the right skills. And right now it is difficult, and it is difficult in some very specific sectors. The first one is digital and AI-related sectors, which is what Marco was already mentioning before. The second one is technical and engineering occupations, and if we think about some industries are really focused on only on this kind of workers, mainly on this kind of workers. So their growth is really limited because they don't find the right people. And the third one is health and care professions, where demographic pressure is the strongest, to be honest. So in this context, agencies and workforce intermediaries play an increasingly important role, and I think it's really important to go back to the basics and think about their role. Their role is to match workers with the employers, so workers with the right skills and put them in the right position. So I think the key takeaway that with that fragmenting market, with shortages persisting in some specific occupations, the role of agencies is more and more important. And that's what I would have as a key message. That role of making sure that the demand matches the supply is key here in the next years to come.
Okay, good. Thank you. Thank you for that.
Oh, sorry.
Of course, Marco, please.
No, thank you. No, I have a consideration of listening to both of you, and I am quite curious because it's one of the thing that I mentioned before on the specific role on the staffing industries. Because I give you my opinion. I don't belong to your industry, so it's an external view from a person that is used to work with companies like yours. So my consideration, and of course I will conclude with an answer to both of you, is about the specific role on the industry, in the sense that the AI is not cannot be considered only as a task killer, in the sense that we can split the specific occupation in a series of tasks, and some tasks can be deleted because they will be done by the AI, or can be changed by the AI. In my opinion, is that we should consider the AI like a strategic architect. What I'm trying to say, that we can use AI at an higher level for instance, for doing several things. For instance, we can use internal data of the company, applying AI models in order to simulate the future. So you can advise the companies, your final customers, in order to say what are the skills needed in the 2 or 3 years. What if applying a what if statistical model? What if the company changes the business model? For instance, the company can sell the software in a old way, or can switch to a software as a service subscription model. So what are the skills that could be needed by this new business model, and how I should upskill or reskill my internal workforce? This is just an example. Or using the same identical AI models, you can identify and try to help the company to understand what are the attrition risks, because you can analyze the internal data. You can understand, okay, this team or this bunch of people are doing the same identical job since 5 years. They are never involved in a big project, challenging project. So at the end of the day, they are unhappy, and so they are at risk of attrition. I don't want to talk too much. So my consideration is, how do you see that you already mentioned that you are already working on an advisory role in the staffing industries. So first of all, I would ask to Martin for this.
Yeah, absolutely, and really good point, Marco. You framed it nicely, and I think the answer, as always, I guess, is it depends. And I think we need to have a very starting with a very industry specific view on, right, what kind of skills are emerging, what kind of skills are required, because it is different. The AI impact in the healthcare market, right, versus in the software development industry, or in the automotive industry. So first of all, one way we go about that is to, as I said before, like go beyond the headlines and have a very focused and targeted approach. The industry, even down to a company level, to really be in a solid position to align and partner with the client to see what skills are needed in the future. We leverage internal data, we leverage market data on that to have a clear viewpoint, and map it also, because AI is one side of the coin, and there are interdependencies with the demographic development, with the talent availability. So we often need to see AI in combination with other trends, right? Because if we tell a client, hey, this skill is not needed anymore in the future, is interesting, but we also need to then have the view what talents are available in the market, right? And then, what if those talents are not available? What are then the ways to compensate a gap which may occur through AI? And the answer, you touched on that a bit as well. The answer is either developing new talent pools, right, which is not easy. Apply upskilling, reskilling programs for an organization. Think about internal talent mobility, right, or within the workforce of a client. So, in summary, what I'm trying to bring across is, right, having a very specific approach per industry, per client, because it's different across. Then map not only the AI impact, but also look at what talents are available, and then think about from a solutioning point of view, how can we combine some of the services we offer? How can we develop partnerships to solve those gaps? And I want to follow up with another question for you, Marco, if I may, which is related to that.
Yeah.
You said, and that's super interesting, that at Lightcast you have limited evidence.
Yeah.
Right? Limited
For
evidence that AI is coming for all our jobs.
Yeah,
right?
for now.
And
for
now.
now. Sorry
With
to
the
interrupt.
caveat for
Yeah.
now, right?
Yeah.
And my question related to that is, first, I tend to agree, right? And what we currently see in the news, in headlines, for specific target groups like graduates, right? Young, graduates entering the workforce, that they really struggle to find a job, right? And the companies are not necessarily fully focusing on that. So I see examples already out there which say the opposite, right? Like 2 weeks ago, IBM stated that they triple the hiring of graduates, because if they don't hire, they don't have employees anymore. So I see some insight and data points which prove your statement that there is limited evidence. But maybe you can elaborate a little bit more on that, and maybe you as well, Robin. What evidence you see, right, and how you basically look at it for the future, because you said for now, right? But what's in the next year or in 2 years?
Yeah. So I added for now because internally we are seeing different signals, and so internally we are still discussing. I mean, with all the people that are working with our economists, analysts, and so on. So there is a limited evidence. I know for sure that the mass media, the newspaper. I live in Italy, as you can easily understand from my Italian accent, and during this week I read. I don't know, 7, 8 articles on newspaper, the topic, the AI, we are afraid of AI, etc. So, but reading the article, there is nothing concrete. What I'm trying to say that is, for now, is limited in this sense. Also for another impact that personally I have spoken with several stakeholders that are telling me that they are cutting the hiring of junior entry-level jobs, because the jobs of junior level think to the law firms, etc., can be done. This task can be done by AI. Okay, but this is not an evidence that we can see in our data. This is an experience. Okay, an experience of Mark on people like me that are daily speaking with stakeholders, different stakeholder companies, organizations, etc. So we don't have the crystal ball. We are trying to observe better this phenomena, and but for now the data are not showing this evidence. So this is my opinion. And following up what you were saying about the capability of observing this phenomena, but not only the AI, because I really believe that AI is a part of the challenges of the labor market. Okay, we are speaking about the labor talent scarcity. We are thinking also about the geopolitics, because the geopolitical situation right now, we all know that it is quite difficult. So it's a part of the problem. But my question for you and for you also, Robin, is when you are digging into local markets, I would like to understand better what are the key indicators that you are looking for having a better comprehension of the labor market. Of course, we are speaking in two different angles of view. So from the staffing industries point of view for Martin, and Robin from more a research point of view.
Mm-hmm. Martin, you can start.
Yeah, from a staffing point of view, right? What are looking at the overall indicators, which then inform how markets are developing, are are at multiple layers, multiple levels, right? On the one hand, we look at our internal data, right? On flex staffing volumes, for instance, right? How is this trending week over week, right? Then on job market data, on popular platforms, how are job postings evolving, right? What are the trends there? Then things like what's an interesting indicator are the quit rates where available, right? Because that shows some certain dynamic in the market. If quit rates are low, there's not a lot of dynamic in the market. If quit rates are higher, people are moving jobs, is positive, for our industry, for instance. Then also some KPIs like the PMI, right? The production manufacturing index, which basically defines the order income for producing companies, is a good forecast indicator for employment, for hiring. So not always all data are available per market, I have to say, and but we look at different layers, right? Some very close to the business, to the operations. Some are more like based on the local labor market situation. Yeah. Over to you, Robin, from your perspective.
Yeah, so perspective of a researcher, so with a different, slightly different lens, I would say that it's really what we do at the conference board, that what I've done in my career over time, is that it's good to have a look at the public data, because the public data will give you a reliable source, and most of the time you can compare over the time, so year after year or quarter over quarter. But these data are always a bit late as well, because the time to produce them, it takes several months. So you have a view with 4 months behind you, not the time right now. And the second source you need to use is a proxy in order to have a data which is giving you a first view of what is happening right now. And job posting are either good one, for instance, on LinkedIn or other sources. But what I'm trying to say is that here you need to try to find what's the proxy, and the proxy which is the most adapted to your situation. And the third one we always use is a more softer approach, which is, if possible, go for surveys, because surveys will give you a kind of sense of what is the opinion of some people. If you go for a survey really targeting, for instance, hiring managers, it will show you what are their feeling. Is it difficult to recruit these days or not? What the main issue, etc. You will have also a more qualitative view. So if I have to summarize, public data will help you to have a very reliable source. Second, if you go for proxies in order to have more a sense of the real time, and then you can go for surveys of really professionals to have a kind of sense of the trend, so of the future.
And in this context, you talked about the where to hire index.
Yeah.
Right. Would you mind to elaborate a little bit more how companies or even myself or us can leverage this index, in planning decisions and apply this framework?
Yes. So I think I can easily explain how it started and why we did it. So here at the conference board, we have meetings with senior executives, and in the past, CFOs and CEOs used to lead the board, most basically. So they used to tell, okay, we need to go somewhere or somewhere, and most of the time, because it was CEO CFOs, it was mainly based on costs, so reducing costs. And a lot of companies took decisions in order to reduce costs, and then realized later on that the quality of the work wasn't there. The skills where where they went wasn't always there, or there is a culture mismatch, which is leading to a reduced added value of these workers. Even though they were cheaper, you needed to invest a lot to make sure that they were on board. So we sat with our colleagues and we tried to think, okay, how can we build a tool in order to improve that or help a little bit our members? And we started with asking our members, okay, what do you want to know that you don't capture right now with only a cost approach analysis? And first, they mentioned skills. We want to make sure that that in your index you measure whether there are skills available or not. Second, you need to measure productivity, whether if I go somewhere, the added value will be there or not. I don't mind paying a lot if the added value is higher than what I paid. Easy one. Labor market conditions. And here we had a very different stance. The goal isn't to measure whether it's tight or not, but whether measure if I start a business there, is retaining employees easy or difficult? Because it's the cost of having to onboard new employees, train them, etc., were sometimes too high in some markets with a low cost at the first glance. So the overall cost wasn't that low in the end. And last ones, institutions, make sure that the institutions are reliable, doing business there isn't at risk. And last, workplace factors, make sure that the culture might fit. And we try to capture that with a lot of different indicators. And as I mentioned, public ones, public available economic data. And second, a lot of surveys, soft surveys. We built a lot of surveys in order to capture data on culture, on skills, availability, business environment, etc. So how it helps our members is that it gives a slightly different view to HR executives, CHROs, to come with a different lens on one market and say, look, I know you want to expand and hire in that market, but this is what I have in hand, and these are the risks if we do that. So we gave a slightly different view, and yeah, that's how our index is used right now. Yeah.
Okay, thank you.
Thank you very much, gentlemen. Time flies very fast, and we are already almost through the hour. However, we've got a few minutes left before we will close, and I will put you facing three very difficult questions, and you will have 5 minutes altogether to answer. So you choose which answer, who wants to respond to which question. We got a couple of questions from the audience at the moment of subscribing to the webinar, and I would like to honor those questions. Question number one. In the context of using a lot of data, we know that some regions are actually having less data available than some other regions. Talking about Africa, sub-Saharan Africa, the rest of Africa, how do you get the data, and what trends do you see for development of labor markets in this region? Question number two, I'm going to give all the three questions and then you decide who responds to what. We've got a great question in the chat right now, which also echoes very well one of the questions we received in advance, is about the role of immigration policy. What is the likelihood that it will play a role in the workforce trends? So we are here talking about the role of immigration. And the third question, and I think specific and maybe very difficult, what are the trends in the skilled trades and contractor space? So we've got 5 minutes. Who is going to start?
I'll start. If you want, I can start on the data, because we are speaking about the data that we can have in Lightcast. In Lightcast, we have been working we have a worldwide coverage, so we are able to collect the data also from the American countries, the African countries. African countries. Of course, there are. You have to keep in mind that the different economy of the different countries. So there are a lot of countries. There are some countries where we have a good quality of the data. I mean, the North African countries, Kenya, South Africa. So I'm going to remind myself. And there are some other African countries that they are more developing countries, and then we have few data. That said, these are the only data that we can get, because in those economies, and we have been working with some important organizations like OECD, ETF, World Bank on those countries. The online job vacancies are the only way to get data on the labor market. There are no statistical official data. So yes, the data could be poor, but there are no other data available.
Great, thank you. Gentleman, who wants to go next?
I can answer on the immigration policy if you want. So three things. I think the implication of the context is that, first of all, government will have a more targeted and skills-driven approach, and go for policies such as fast-track visas or more selective immigration policies for high-demand skills. They will have no matter the political situation in one country, because in some countries, such as France, my country, immigration is a very sensitive topic. They will have to go for this kind of policy, because the labor shortages, talent shortages will force them to do so. And last point, the competition for talent will increase a lot globally. It's not only a matter of Europe, North America anymore. It will be everywhere. And the attractiveness of one market, one country will be key and will be at the heart of all these policies. So if I have to summarize in one sentence, government will move from a passive approach, I open doors and see what happens, to a more proactive way of seeing immigration which would be really close to what multinational companies does, which is closer to a workforce strategy. How I can make sure that my country is attractive enough for the kind of people I want to attract.
Yes, it's a complex picture. Thank you.
Good.
Martin?
Then I tackle the skill trade one, right? I think this market is defined by like a structural scarcity, right? There are not enough electricians, plumbers, welders, carpenters, and so on. And when we look at some reports like from the WEC, the World Economic Forum, they released a report last year, right? The future of jobs, and some of you may have seen this report where they show that until 2030 we have 78 million new jobs, right? And sometimes this figure is put into the wrong context, because in some of the headlines on LinkedIn and so on, I saw AI is creating 78 million new jobs. AI is part of the drivers, what's creating new jobs. The big part of net new jobs or unfilled jobs are in skilled trades, right? Why? Because also many people who are retiring over the next couple of years are in these roles, leaving a gap, right? And net new jobs will be created in exactly those in those areas, right? And that includes mechanics, workers in logistics, also in healthcare. We touched on that a little bit. So in summary, the trends for skilled trades are that there is a shortage, right, and a gap in especially established economies, and also that triggers people, young people at school to think about what they want to do in the future, because the skill trades are often less impacted by AI, right? And the likelihood that they are still needed it's super high. So even from a young generation, right, the demand, the scarcity made them to rethink whether they study or enter an apprenticeship, right? And speaking from own experience, right after school, I did an apprenticeship as an electrician, right, which was a good start overall. And then after that, I studied, and in the current situation, whatever happens with AI, right, and a huge demand on skilled trades, I always have a fallback option on that. And I want to close with that, seeing a lot of opportunities in these jobs across generations. So back to you, Victoria.
Brilliant. This has been an amazing panel. I should not use the word panel, but it's been a great discussion. If I have to summarize, I think I will probably pull out these three takeaways from today. We are watching the rewiring of the labor market globally. And if I put the 3 points together, I would say from AI complementarity to AI replaceable tasks, maybe Marco is going to contest me on that. Taking full your point, from occupational-based labor markets to capability ecosystems, if I can put it this way. We are looking at skills-based approach and kind of pockets of talent shortages and other pockets of talent availability. And I think we could say that we are entering an era of divergent resilience somehow. And I would say that if we have one advice to give to the CEOs today in how to survive in the current economic and labor market situation, I guess the advice would be, and maybe Martin, you can step in there, is that they need to treat workforce strategy as a business strategy. It needs to become part of business and look at it from a strategic business point of view to really make the most of this very difficult and fragmented labor market. In the last 2 minutes that remain, I'd like to just quickly ask you to rate this WEC conversation, and really it's going to, I don't know if you can see the slide properly. Okay, it doesn't work. I'm sorry this time. I would like to announce the next web conversation, which will happen on the 23rd of April at the same hour as now. And it's going to focus on migration and labor markets in Latin America and the Caribbean. And here we are going in different cultures and geographies. And this webinar is going to be in Spanish. So prepare your Duolingo subscription. It's going to be very handy. Or maybe you have some AI tools that is going to help you to translate everything that is going to happen on that day. Thank you very much again to our speakers who have done an amazing job and made this hour very informative and very interesting. And I wish you all a very good day. Bye-bye.
Thank you very much. Bye-bye.
Bye.
Thank you. Bye-bye.
Thank you.